Hello guys, welcome to the Trading Parrot. We are extremely close to get to payday. Just 2% move up in the price and we liquidate all the short-term accumulation of shorts. And if we do that, we are going to ignite not just a short-term signal, but a collection of longer-term signals that we have been accumulating. This includes the hash ribbon, potentially signaling a buy signal, the daily potentially triggering a global breakout, the weekly crossing into the bullish area of the range, the RSI weekly doing a rally into the next resistance at RSIs of 70, the yearly candle holding in the green, the W bottom formation slamming through the CPR pivots into the next resistance at around 110k, the area of panic sellers being done in a shift into profit taking. And if that wasn't enough, in this video, I'm also going to be able to answer for the first time the question of how can we dodge this bearish cross on the monthly stochastic RSI, which is basically a signal that we must revert before the end of February. We have never, ever in the history of Bitcoin on a topping year survived a bearish cross after having been in the middle of the range. And I have developed a new version of the stochastic RSI in PineScript, and I'm gonna be able to answer the question at what price of Bitcoin the bearish cross opens them out and we prevent the disaster of going into a bear market. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. I am on a quest to get 1,000 likes. It is a huge challenge to get 1,000 likes, even though we have plenty of videos with 900 likes, but since retail continues to drop the towel and things are becoming more and more bullish thanks to them giving up, at the same time it's a lot more difficult to get those 1,000 likes so that the YouTube algorithm believes that this content is worth showing to more people. So let's get those 1,000 likes over this weekend. I know we can get them once Bitcoin goes into a new all-time high, but I'm stubborn. I want to do it now. Now that we don't have retail, now that things are very quiet, this is the time to get to an all-time high of likes. Things that are going bullish in the market. I'm putting an eye on what's going on with the SEC when it comes to ETF filings. It seems to be that things are accelerating into that direction, and that is definitely helping large caps to have a chance to hit new all-time highs. I'm talking about XRP and other coins that are also filing for an ETF on spot. Other news that are incredibly bullish for crypto and can help a lot, not just crypto but general markets actually to continue the upside, is to see now a second consecutive week of the Federal Reserve balance sheet adding instead of reducing. The past week we went from 3.18 trillion into 3.22. This week we are getting to 3.27 trillion. We still don't take the high of the 13th of January, but you can see, if you're familiar with price structure, you can see the double bottom formation in here, and now it is a lot more likely that this is a confirmed pivot, putting a higher low. Now what we need next is, in the upcoming weeks, we need the Federal Reserve to add beyond 3.34 trillion to their balance sheet, and that's definitely positive, not just for Bitcoin to go higher, but actually to get more liquidity everywhere, and then start seeing that the liquidity that lands in crypto potentially taking the high of 9th of December. That is literally what drives everything up. There's no magic, no narrative, nothing. There is liquidity and it's gonna go into literally any pockets. Of course, altcoins are a lot more diluted now. You need to be more picky. This is not 2021 where there were a reduced number of altcoins, and as soon as there was liquidity, and let's look at that liquidity entering into crypto in 2021, it was grotesque, and that's why pretty much everything was pumping every day. I also have, as part of the news, a continuation to the upside on the M2, and I can see it in both scripts that are tracking the M2 global. Both of them print a similar candle to the upside, confirming that we have broken out from the W pattern formation in here. I have circled each instance where we had a double bottom formation, and the only one that didn't play out was in 2022 in April when we went lower. It seems to be that now we are out of the woods in that sense, because we are far beyond the bottom of 105. Now we are getting closer to 108. Global liquidity definitely needs to challenge the all-time high and not put a double top, of course, and we do that just by printing a decent all-time all-time high. We're going to continue to track that together with the Federal Reserve, how much enters into crypto, and the liquidity in China that has settled to the downside. Be careful when you read on Twitter and social media about the liquidity in China. I learned from Benjamin Cowen that the calculation from other indicators, not this one in particular, are showing that that liquidity has doubled, and that is not the case. Don't fall for the trap of doing the same misreading that many influencers are doing at the moment. Trying to convince people that the liquidity in China has doubled makes no sense. That by itself will be a catastrophe of inflation. This signal, the signal about the aggregated open interest, is also working amazingly well so far. It's all going in the right direction. It is telling us that we are heading for a potential breakout from the top of the flag. And that is because we have had something that we can call a potential retest around here. We went to 30 billion. We haven't touched yet the 29.57 if you really want to be picky. And the last time that we did that in August in 2024, we came back and tested this support at 29.5 billion, or the equivalent one. Let me show you in here. We went up to the middle of the range and we came back to retest 15.7. So that we haven't done it. We have done something similar, which is to come back and getting closer to the blue line, but now we are heading into the middle of the range. So we can expect anything in here. Either we go straight for the top of the range and we break out immediately, or we repeat the same formula as in 2024. We come, we test the support, hopefully in a successful way, so we can also go in this direction. Of course, there is always a small percentage of the setup to fail and break down, but I'm still excited that the pattern is pointing in the right direction. And with the liquidity increasing and with other aspects on our side, I start having that bias of starting to believe that this might be the signal that actually plays out this time in 2025. For the month of February, now we are at minus 3.86. We're starting to reduce that gap, potentially to see a green month. Crossing fingers that we continue in this direction, because we only have 1 week left to erase the red from this chart. Let's continue in the positive side of things. The hash ribbons hasn't printed yet the buy signal on the daily time frame. The mouth is still open, so anytime from here we might see the signal. Just remember that if the signal appears while price goes up in an intra candle on the daily, you need to wait for daily close for confirmation, because if we go, let's say, to 102, we take all that liquidity and then we get an ugly rejection that gets us back into 95, then the signal is going to appear and disappear during the same day. So that's why it's very important that we see the signal, we end the day, we start a new day, and we still see it in the same place, in the same candle that already settled. On the 4 hour yesterday, I gave you a word of warning when we were hovering around here at 98.7, getting closer to 99, because multiple times this orange line has held the price and has made it fail. And you can see how this rejected the price, put it below, turning it into a resistance. We had another candle that failed, that was a 5 a.m. Luckily, so far, this 4 hour candle could be the one that puts us above this line, signaling potential continuation to the upside. We have already put a high of almost 99k, and that is already beyond this high, but not beyond the high of 100.1, which, if you remember, on 7th of February, we went all this high, and it was just a liquidity hand that brought us back into 98.2. So take note of that and be careful depending on what's your current strategy. I have no clue where you enter on your swing. These words of warning are just in case they apply to you. They do not apply for my particular case. You know pretty well that my average at the moment is 95.2, and I'm looking for the top liquidity in here to reduce my position. That is my plan. But let's say you enter on the breakout at 97 and you see the price go all the way to 101, and then it retraces below your entry. You're gonna be in a position at the top of this range, and that can drag you all the way down to 93. So your risk is different than mine and different than anyone else. So the context of give you the warning, for example, yesterday, of telling you 98.5 is a tough resistance, it is a valid one because this is a trading range on the 4 hour, and 98.5 has been a BI so many times that is absolutely worth being aware of that. Getting 4 candles of indecision and 1 in progress, I'm still calling for warning at this level in case we we needed to see a rejection in here and then go and test other trend lines that in that case could be the ones that help us getting us out of this trap. Anyways, let's speed up. Let's go on the daily time frame, and you can see that we are doing pretty well after the signal of reclaiming the top of this widening symmetrical triangle. My call was we can do a rally into 55. There is a confluence at the top of the triangle with the RSI 55, which is our next resistance. So far we have done almost 90% of that. Here is where we need to pay attention. We are currently paying attention on that resistance, but 55 is a daily resistance. So the 4-hour one is important. The daily is double important. We broke out from local resistance, this gray line. We saw it last night. We did the close, settling with a breakout. Now what comes next is a small move into the next resistance, which is at the moment located at 56. That is thanks to the speed that we broke out. I was aiming for 54, but resistance is actually now at 56. So let's update that in the chart. Let's increase it 1 point, and now we get that confluence a little bit higher at almost 100k. So pretty much matching with the forecast that I left here in the line. So we got a little bit of more room, of more work to do to get us out of the daily resistance. This is not any daily resistance. This is the global resistance at the moment. It is global because it's measured from the top. We have 4 tops of RSI in this whole bull market, diminishing momentums. The last one we did it at 85, and what we need to do next is already drawn there. We need to break above now 56, retest it, and then aim for another rally, a 5th rally into a top of the RSI, potentially into 83, 84. It is not for granted. There will be loads of stones and things in the way that we are gonna have to jump. There are gonna be challenges. There's gonna be risk in the way, but it's always fun. Remember as well that on the daily we are in this trading range in here thanks to the volume profile. We know that that is 103 and the lower end is 90.7. So rejections at 100k could well bring us back to the bottom of the triangle and then take the 93. Remember, there is liquidity in there. If there is a strong rejection, be prepared for that. And if we manage to break above 100k, there is plenty of room to get into 103. In the next part of the video, I am going to cover everything that has to do with the challenges of the price getting into 103. The reason I'm gonna do that is because I'm holding my long and I want to start looking into taking profits. How much profits? How much I reduce? Do I take full profits at a level? Is there something that is an immediate challenge? All of that we're gonna cover very quickly. On the weekly, we are doing something incredibly nice. We are challenging the middle of the range on the weekly. Let's zoom in here. You can tell that this is the bearish middle of the range. Then you have the top of the range, which is bullish. The resistance is 98.3, give or take. And we came back down. We held the support at 93.6. We talk about that 3 times in a row we have held the support. If this is a rejection, if this is a dead cat bounce and 98.3 tell us nope, you're going back down, then the bull market support band is gonna be there at around 90 to 89. On the weekly RSI, it seems that this is becoming our pivot low in this channel to the downside, and as I've been saying multiple times this week, if that is our pivot, I am bullish for a rally into resistance into RSI 70. That at the moment is around 110, which represents literally a new all-time high if we were able to do such a thing. On the yearly, we were very close, and at some points we've been this year with a candle in red, and in February we did that as well. At some point we went below 94, of course, and now we are at 98.8, somewhere around there, going back into the green. On the CPR model, as we are approaching the last week of February, let's remember what we did. We touched the first support. That calls for the next month to repeat the same thing. So whether in March we're gonna get the CPR pivots in here and then the first support here and the first resistance there, that could mean the price goes this way and then it needs to touch again that support. We're gonna keep that in mind, and we're gonna see as well how high we get in February, because if in February we manage to touch as well the top resistance, which we already did in January, then the model says a contradictory thing. It will say that in the next month we should also touch the first resistance, and that is gonna be potentially priced at around 120. That has never happened to me, or at least I don't remember how I approach that scenario of contradiction, but I will be tempted to say that the last event is the one that matters. So if we go to 111.5 this month, in March we could continue. That is getting ourselves ahead a lot, so let's slow down first before we talk about 110 or 111. Let's talk about the pivots. The monthly pivots for the month of February are between 99.3 and 101.6 for continuation to the upside, regardless of touching or not touching in the 111. The first thing at hand is to conquer 101.5, and we have a recipe for that. That means that there are chances that we do it. It's not that it's absolutely impossible. How can we get there? Well, we have this double bottom formation in here, and we have a neck that I have decided to place at 98k. Why is that? Because the candle closes are around or slightly below 98k. We had the breakout yesterday, and today we have the first candle that is with the full body above the neckline, and we are immediately challenging the first pivot. Then we need to go for the second and then the third. We need basically to use the momentum from this breakout, which is the high of the double bottom formation from the low to the high, and we place it over the neckline, and it's giving us 103k. That puts the price above the pivots. So we have a recipe to do that. We just need to now do just one thing. Let's see how the price reacts in the next 7 days against those pivots. In the month of March, we're going to get absolutely new pivots, and the whole thesis is going to change, particularly if we don't manage to touch the top resistance, because we have touched the initial support. It's not the top resistance, actually, it's the first resistance. The top resistance is 132. Today is Friday, and we're likely to produce another CME gap. Last week we produced this one, we took it, so let's continue following with the strategy of using CME gaps. Let's monitor the closing price later tonight. Ideally, we want the highest price possible to get the strategy of the insurance price that I love to trade. I want to pay a visit to Leverage Squeeze, if you allow me, just for 30 seconds. I remember I was calling for the signals of 102 and 107, shorting Bitcoin from there. That will have given you an average of 104. If you short at 104, you will have had a drawdown of around 5% to the upside, but then the downside was around 13%. That, if you are using a 3x or a 5x, will have been a great short. I published these signals on my Twitter, Instagram, and Telegram, and many people were saying they're not gonna play out. I just want to be fair to the signals. They don't always play out, but most of the time they do. We don't have any new signal so far today, but when they come back, I will be the first one to post them in my social media. That's where time-sensitive things go. Make sure that you're following me. All my social media links are in the description. Never search for me, because there are thousands of Trading Parrots. Also, it's worth mentioning that people are trying to scam like crazy. I have blocked private messages on Twitter, Instagram, and on Telegram. So it is virtually impossible that you're talking to me on any social media in private messages. So if you are thinking that you're talking to me, particularly when they start asking you, what is your strategy? Can you send me some Solana and all of that? Please don't be so naive. No private messages from the Trading Parrot. Those are just scammers. And I'm extremely excited today because I built this script. I came up with this idea this morning because I'm really annoyed with this stochastic RSI on the monthly about to print a sell signal. And guys, I really want to give you always fresh value. If you appreciate that and you haven't hit the like or written a comment down below, do it just now. It really helps the channel, and the more I see that, the more I work to get fresh value to share with you. I really enjoy sharing these things and hearing your opinions, particularly when you give me new ideas. That really helps me. This is a give and take, a win-win. Making these videos make me a better trader, and I hope it's also making you a better trader. If I didn't do my channel like this, I wouldn't be so disciplined and I wouldn't be so accurate for the calls. And pretty much that is one of the biggest reasons why I decided to stick to this, to continue growing as a trader. And the new thing this week is pretty cool. If you are a PineScript coder or you don't know anything about this, it won't matter. matter. The value is 100% guaranteed. We have a bearish cross potentially confirmed in 1 week by the end of February, and that is a huge event. It doesn't matter how bullish things look in the 4-hour time frame at the moment and all the hopium that we're consuming. If we confirm in February a bearish signal after having been in the middle of the range while being in a topping year, that combination of events, Bitcoin has never ever survived continuing in a bull market. So the $1,000,000 question at the moment is, what price do we need to close in February to prevent a settling with a bearish cross? And I have the answer. I have written a version of the Stochastic RSI that has just 3 more lines. It's called the Stochastic RSI forecast, and it comes with just one additional parameter. This parameter allows me to enter, instead of the current price, what I call a forecast price. So if I disable this and you focus on the data window on the right hand side, you're gonna see that both are giving the same, 82.78 and 83.79. If I enable this feature, then I'm allowed to put any arbitrary price in this box. Beautiful. So now I can manipulate only the current price. I basically override the current price with this arbitrary number. Let's say I put 95k. Of course, we're gonna still be in a monthly bearish cross. And if we start going up and we get to 99, we still have a bearish cross. You can see it there. So what is the price? Do we need to close at 99.5? No, we still have a cross. What about 99.999? That is not a bearish cross. You can see it there. It's 84.78 and the D is 84.46. So they don't touch. What is the problem of that? It's not just sufficient to not cross, because if we leave it like that, pretty much the month of March will have a very tough month to undo something that is pretty much touching already. So let's say we go to 100k, that is pretty much the same. If we go to 100 and 500, then we get something like that. So here it is a little bit of a finger in the air. How wide the mouth needs to open now to prevent the bearish cross? And I will say with 101.5, I feel a lot more confident because they are already spread away. Notice as well that Stochastic RSI is quite a crazy indicator. Sometimes you don't get the bearish cross, like in the month of December 2023, you didn't get it in January, and then in February they get the same value of 100. So is that a bearish cross? Well, they haven't crossed literally, they're just at the same value. They need one to get to a value over the other one to literally produce a cross. That depends on your definition of a cross. I will say that at this point in April, you actually confirm that in the previous month you have the cross. Anyways, all of this is super interesting, but I know that I already lost more than half of you with this really nerd and geek stuff. Let's continue with the data and the short-term stuff. Let's look at the liquidity pools and the likelihood that we hit those shorts. Large whales have done a little bit of a move in here in terms of inflows. You can see there is an increase there to 7k, whereas the outflows print 5k followed by just a few hundreds, and that has caused that there is a bounce on the moving average. Not a panic event, but you know, they're distributing a little bit. Yesterday we also saw some distribution from the ETFs. We had the highest distribution in the past 2 weeks with 364. Those numbers are still not as big, but we are starting to roll over on the top of the all-time high of cumulative flows. We need to revert this. I know that inflows on ETFs, when they really deposit, they can deposit thousands, so 300s can be fixed very quickly, but I wouldn't like this to become a trend now that we are just reducing and reducing and reducing. We exit from the fear, we exit from the neutral, now we are in the greed. Get ready in case we enter in extreme greed. I will let you know, and I will make sure that you are emotionally prepared for those slaps in the face. Remember, we need to look for exits when we get into extreme greed. That doesn't mean that we execute the exits, but we need to have mind open and focus on exits. If we enter in a new trend and we exit from the flag, we hold there and we look for the healthiness of the breakout, but we are still with the mindset, where is my exit? Where is my exit? If you are thinking now in greed, where is my entry? What's wrong with you? You should get the 3 slaps, the 3 coffees, vary that coffees, and concentrate. You are doing the opposite. If you are sitting on your hands right here, one, what were you doing last week when I was calling for longer term bullishness and for a drop in the short term on 4 hour to catch some entries? I enter a 95, you have the chance chance to enter even below 94 and even have a better average than me. The warning buy is still there on Cerberus. We are still in the window of looking for longs. Let's go into the liquidity. The pain has started. I had to close the windows because people are screaming on the streets. I can hear all the shorts. Do not take public transport. People are sweating it out at the moment. From 98.8 into almost 101, there is a lot of red. I talk a lot about these targets, and I usually forget to mention that not always when we pinch one, we pinch everything. People tend to perceive I'm trying to say that when showing the liquidity, but I think it's very important to remark that here is when we start seeing the risk. The risk of what? Sometimes when you liquidate levels like this, you just pinch one and there is such a huge reaction of the forced close accounts, and when there is no petrol to continue immediately burning to the top, the effect is a retracement that is too big, and if it breaks structure, sometimes it takes a lot longer to come back for the rest of the liquidity. I no longer get disappointed with those things. I just focus always on creating a plan that can survive these things regardless. But if this is the first time that you see a chart like this, be aware that things don't work like, okay, I got my 100% certainty that we're gonna take this, I will open a position here and I will close it there. And if it doesn't work, I will write down in the comments my anger because things do not work the way I want them to work. I'm just exaggerating. You know, I was born in Argentina, and in Argentina we are very exaggerated, very passionate, and as you probably learned by Milei, we exaggerate getting into the territory of lying too much as well. Not lying. Top liquidity is super exciting. Is still from 113 into 128 more or less. What we are aiming for is even in this dark area that long-term liquidity shows us pretty much worthless. But there you go, it's so close to the price. I think it's absolutely doable that we take that. Once we get that liquidity that is hovering this 100 and something, we do need to do something really difficult, which is to get all the way to 105 with this huge depression of long-term liquidity. When you look at this chart, this gets us into maximum 103. Okay, that's the target of the double bottom that we look in earlier charts. But then the elephant in the room is also here in the short-term liquidity. You can see that there is this depression there, and that is the challenge. How are we gonna get us into 105 really now so we can continue with liquidations on the top? And most of the time, not always, the answer is by pulling back and adding shorts in that vacuum so we can continue higher. That's most of the time the answer, but allow yourself room for a potential, whales start buying like crazy. They wake up from their sleep. They've been sleeping for very long, pretty much all February. I don't have any activity from them. So if they suddenly get excited with this move and they decide to go all in, sometimes we cross areas that there is no liquidity and we do not seem to need it. Immediate liquidity in the past 30 days, there is big chunks right on top of the price. The largest liquidation at the moment from the past 30 days is 99k, and it starts diminishing into 99.5, and then we get another one in here at 100.7, which is the same size as if we go to 96.5. So you get multiple potential outcomes. You can go straight for the 105 without looking at the 96.5, or you can take some of this and then come back for a retest of 97, 96.5. And we're going to look into fair value gaps supporting that thesis. It's about probabilities. I'm not going to tell you which one is going to play out. I'm going to tell you what is likely. No one can tell what is going to happen 100%, but some people expect to hear just 100% so they can take that sweet move from A to B, go to sleep, collect the cash. That is not trading. Trading doesn't work like that. The sooner you realize that, the sooner you're going to become a great trader. Cool. Let's look at the surgery now of the order book. Finally, we have less of these high leverage traders. The red in here was calling for a move down. They came back around here on the 20th of February, but now they're not here somehow. Longs have decreased too much in my opinion. That is something I don't like. So that's why I support the idea of going to 97 or 96.5 to get them interested again to increase the longs. I'm I'm gonna show you areas where the longs go so low that they test this upwards trend line. And one area was this top going up. Let's magnify the chart. So in here you can see, try to scan top, the price, and the global longs and shorts on the bottom. And you can see in here there was a retracement from 105.7 to 102. So that is a decent 3K retracement. This area there, a retracement of 6%, touching the blue line again. This retracement stop once we did almost 9% down, and this bottom there did a huge retracement of 14%. So don't underestimate that the longs have left. We are here very close to the blue, so I'm expecting in here to take some liquidations, and then thanks to so little longs, a pullback, a retest. And the ask has increased from last night that I told you we are only seeing 0.02 negative. That's too little to stop the move up. Now we are at 0.05, 0.06, still not as high to give me full confidence that we're gonna retrace from here. We typically do it at minus 0.15 or 0.2. That is a lot of ask in this previous range, and it typically showing local tops. So I think the confluence of too little longs with this ask at this point in time can allow for pinching some more liquidation levels and then a pullback. That is also supported by the delta that at the moment is 361k. That is a decent delta, putting longs in risk with the liquidation levels right below the price. And we are starting to see something. Yesterday we saw the same, and now we see the continuation of the same effect on the monthly chart on FAR charts. You can see that the brown whales have woken up after a long period from the beginning of the month of only selling or not doing anything. This month from the 4th of February has been the month of small wallets. You can see that the 100 to 1k, this orange line has increased. Everybody else, no, we don't want to take part of this. That changed a few days ago with this spike of the brown whales, the largest ones of 1 million to 10 million, and it increased significantly into the top end of this normalized view that we are seeing. We can also see a small spike here of the purple ones, and we are seeing that the small orange pockets are actually going in the other direction. This type of divergence suggests that the people that know what needs to be done, which in this case are showing that they are buying, could create a situation that we continue higher from this end. This is an interpretation just isolated from this. Of course, we have seen some things that are a little bit more bearish. The longs stepping back, and now looking at the order booking here, we can see a big chunk of ask liquidity there on FAR charts. That is around 45 million. I think it's not that big, it's just because I'm reducing the percentile. If I place it at 100, it looks just like a red block, which is less than the one we have at 110,000, this time with a volume of 72 million. But yeah, people want to short at the moment 99k. We'll have to see if the purple and the brown continue adding, because they can definitely outpace the orange ones that are reducing and could get the price to go beyond the 100k to liquidate more people. We are seeing that reduction as well on trading light in here. There were two levels of 700, and now there is just one level of 700. One of them reduced to 85. That is at around 101k. There is some selling in here that they are moving up. We can see this in the 15-minute chart, how they are placing it now at 99. Now they move it to 99.3, and the blocks at 101k are still there on the 15 minutes. Support has been placed at 97.3 with 656. This is something to take note as well. It doesn't mean that they're gonna hold if the price goes there. Sometimes they move it in the last minutes, but it shows me what people are thinking or what sort of manipulation is going on. Notice that we have a new support that is extremely thick, that started with this move down of the price that went to 93.5. As soon as we got there, they placed limit orders at 85k. They really thought that we were gonna break down on, and that we were going to get bought at 85. That's 2.1k. That's huge amount of ask there. Sorry, this is bid. And then on the lower end, we still have at 78k around 1,000. That overlaps with the previous CME gap. And we have taken all these fair value gaps so we can move them now to new positions. This at 95 is gone, and we have one that spans all the way to 96.8. If you remember, there is a liquidation at 96.5 somewhere there. It was substantial like the one at 100, so price needs to decide to take first this fair value gap and the liquidations around there, or close the fair value gap first, get rid of the imbalance, and then go to the upside. Guys, pretty exciting times. We are entering the weekend. Probably the volume is gonna drop quite a lot. Likely this weekend is not a long weekend, so we are gonna be monitoring the price of CME versus the exchanges by Sunday. We got a lot of work to do. Guys, if you wanna trade Bitcoin and altcoins, I do that on Bybit and OKX myself. If you decide to open an account using the links in the description, you can claim 60,000 on OKX, 30,000 on Bybit, and by using those links, you reduce the trading fees to a minimum. I got a new campaign on Bluffing. This is a non-KYC exchange offering multiple gifts in this campaign, including a Model 3 Tesla. There are deposit rewards of 10% up to 3,000 in future bonuses. I find very attractive this particular campaign. I have a second exchange that is non-KYC called 2bit, offering up to 30,000 in rewards. All the rewards, all the gifts are based on trading volume and the size of the deposit. I'm sorry this morning I couldn't publish the morning update. I had to go to the GP. This time my daughter, we are always with something. And that's why I couldn't put the video, but I hope this one is gonna compensate. It's back with alpha and it's great timing as well with what's going on with the price action as well. See you on the next one. Take care. Bye bye.